Okay, so you're here with us because you want to get to the bottom of things right. You want to understand these complex stories. And that's what we try to do with these deep dives. Today, we're going to look at a fascinating situation. It's about Michael Saylor and his company, MicroStrategy, and they've gone all in on Bitcoin.
Yeah, and for those of you joining us, the big question is, has Saylor's super aggressive Bitcoin strategy created a huge risk? Like, not just for his company, but for the entire Bitcoin market. Looking at this information, it's a little scary. There are some serious red flags here, but there's also like a surprisingly optimistic side to think about, like if things really went bad.
Yeah. So in this deep dive, we want to break down the arguments and look at the potential risks, and then explore the crazy twists and turns of Saylor's Bitcoin gamble. By the end of this, we want you to have a clear understanding of this whole thing without getting bogged down in all the details. Okay, so let's start with MicroStrategy. A lot of people might know them as like that business intelligence software company,
Mhm.
but things have changed. Big time, haven't they?
Oh, yeah, for sure. Under Michael Saylor, MicroStrategy has completely transformed. It's not really a software company anymore. It's basically a huge bet on Bitcoin. They've been buying up Bitcoin like crazy, using all sorts of methods, like we're talking cash reserves, debt financing, loans backed by their Bitcoin, even issuing new stock to buy more Bitcoin.
And the scale of this is just mind-blowing. They have billions of dollars in Bitcoin, which makes them a major player, like a Bitcoin whale. It's a
Yeah.
huge gamble, an all-in strategy, as they say. And the risk is that their whole plan hinges on the price of Bitcoin going up and up and up.
Exactly. And what really stands out is how they're using leverage. So leverage basically means borrowing money to try and get bigger returns. But it's risky because it also magnifies your losses. And MicroStrategy has been using a lot of it. One example is that $25 million loan they got from Silvergate Bank,
Right.
which was secured by their Bitcoin.
And the scary part was that forced liquidation price, right around $21,000. That definitely got everyone's attention. Luckily, they paid off that loan before Silvergate went under. But the sources we looked at point out that MicroStrategy's debt structure is still very risky.
Oh, absolutely. We're talking billions of dollars in liabilities through things like convertible debt and senior secured notes, just so everyone's clear. Convertible debt is a loan that can be converted into stock under certain conditions. And senior secured notes are a more traditional type of debt, which basically means they get paid first if the company goes bankrupt. Now, if Bitcoin crashes, things could get really ugly. Their Bitcoin holdings would lose a ton of value, which could tank their stock price. And if the stock price drops too low, it could trigger clauses in their debt agreements, which could force them to repay those debts earlier than planned, or even lead to a liquidity crunch where they don't have enough cash on hand.
And then there are margin calls. Now, for anyone who doesn't know, a margin call happens when the value of your collateral for a loan drops below a certain level. So the lender demands that you put up more money or sell the asset to cover the difference. The sources we looked at suggest that if Bitcoin's price drops significantly, or even if MicroStrategy's stock takes a big hit, they could get hit with margin calls. And that could lead to a massive sell-off.
Which brings up this really important point about how everything's connected. It's not just MicroStrategy's Bitcoin that's at risk. Their stock could also be used as collateral, maybe even by Michael Saylor himself, since he owns so much of the company. So if the stock price crashes, it could trigger a whole new wave of margin calls for him personally. And then you have this really dangerous feedback loop where falling prices force more selling, which drives prices down even further. Like one of the articles described it as a potential death spiral, both for the company and their Bitcoin.
And then on top of all that, MicroStrategy recently issued new stock, the STRK and STRF offerings. And on the surface, it seems like a way to raise capital, probably to buy more Bitcoin. But what does that mean for the people who already own MicroStrategy stock?
So tying this back to the risk we've been talking about, issuing new stock basically dilutes the ownership of existing shareholders. It's like cutting a pie into more slices. Each slice gets smaller. By increasing the number of shares, each existing share represents a smaller portion of the company and its future earnings, which can lower the earnings per share and potentially decrease the company's value for current stockholders. So yeah, they get more money, but they're also spreading the financial risk.
And any negative consequences across a larger pool of investors.
It feels like we've seen this before, right? One of the articles brings up Michael Saylor's history during the dot-com bubble. Can you remind us about that? Yeah, it's interesting. Back in the late 90s and early 2000s, during that whole dot-com boom and bust, MicroStrategy under Saylor had a major crash. Their stock price plummeted over $6 billion in a single day. when the SEC started looking into their accounting practices. And the article suggests that maybe there's a pattern here, like maybe Saylor is using the same high-risk speculative strategy, but this time with Bitcoin instead of internet stocks.
That's a bit unsettling and makes you wonder about the bigger picture. What happens to the entire Bitcoin market if MicroStrategy collapses or gets slammed with margin calls?
Well, you have to remember how interconnected the crypto market is. If MicroStrategy is forced to sell a huge chunk of their Bitcoin, it could flood the market with sell orders. Imagine a whale suddenly dumping their holdings. It creates a ripple effect and could lead to a sudden and drastic drop in Bitcoin's price, which could then trigger panic among other investors. And then you have this widespread sell-off, which could push prices down even further and potentially lead to a prolonged downturn in the whole cryptocurrency market, what's known as a bear market.
That's a pretty scary scenario. But one of the articles we read actually presents a contrarian view, like a surprisingly optimistic take on this potential disaster. What's that all about?
It's an interesting question about Bitcoin's long-term resilience. The argument is that a failure of a highly leveraged player like MicroStrategy could actually be good for Bitcoin in the long run. They compare it to the collapse of Mt. Gox, which was that major Bitcoin exchange that got hacked and collapsed back in 2014. It was a huge shock to the Bitcoin world, but eventually Bitcoin recovered and went on to grow significantly.
So the idea is that something like that, while painful in the short term, could actually help to clean up the Bitcoin ecosystem.
Exactly. The thinking is that it would remove a big, highly leveraged and somewhat centralized player, which would strengthen Bitcoin's core principle of decentralization by reducing the influence of these whales who are taking huge risks, so it could make Bitcoin more robust and more aligned with its original vision as a decentralized peer-to-peer currency.
And that connects to the broader message about the importance of decentralization in the Bitcoin world.
Right? The article strongly encourages people to hold their own Bitcoin, what's called self-custody, instead of relying on third parties to hold it for them. The point is that these centralized players, whether it's a public company like MicroStrategy making leveraged bets or large institutions, they introduce risk and might not always act in a way that benefits Bitcoin's decentralized nature.
And the article uses some really vivid metaphors to describe how risky MicroStrategy's situation is, like comparing them to a tightrope walker.
Yeah, that image really captures the danger. Imagine someone walking a tightrope high in the air. That's risky enough already. But now imagine they're carrying these increasingly heavy weights, which represents their debt. It makes the whole act way more dangerous, and the potential fall much more devastating. That's basically where MicroStrategy is with all their Bitcoin and their massive debt.
And then there's that blunt description of Saylor's strategy as financial Russian roulette.
It's a powerful metaphor, isn't it? It suggests that with every loan they take, every bet on Bitcoin's price going up, they're increasing the chances of a catastrophic outcome. It really highlights the escalating risk of their approach.
So stepping back and looking at everything we've learned from these sources,
Yeah.
what's the main takeaway for someone trying to make sense of all this?
I think the overall message is a cautionary tale. It warns us about the dangers of excessive leverage and reckless speculation in the crypto space. Even when it's disguised as strong conviction in Bitcoin's future, it shows that even the most bullish narratives can hide significant and potentially destabilizing risks.
So we've gone deep into the high-stakes world of MicroStrategy and their Bitcoin bet. We've looked at the very real possibility of huge risks because of their massive leverage. But we've also considered this surprisingly optimistic long-term outlook for Bitcoin. If a player like this were to fail, it really makes you think about the tension between centralized, highly leveraged players and the decentralized nature of the crypto ecosystem.
And this brings us to a question for everyone listening. Given the history of speculative bubbles and the inherent volatility of the crypto market, what are the signs you would look for? To gauge the true risk of these high-stakes strategies, it's a fascinating case study in the fine line between innovation and potential instability, and something to keep in mind as you follow the developments in the crypto space.